Good morning. It's July 22nd, 2023. It's the Wall Street Weekly Wrap-Up with your host, John Newquist. And we got a little bit more than usual because we had a big earnings week. This is one of the big two earning weeks every quarter. And we'll get into it because we have the banks starting it off. The banks did overall pretty good. Bank of America, revenues went up 11%. Profitable, of course. Not as good as Citibank. And we look at the chart again. This is one of the stocks that has lagged the general index for the banking sector. 200-day moving average, it's up there now. So if you were going to buy, that's not a bad time to buy. It hasn't caught up yet, but the uptrend is pretty good. You can see we've been up a lot higher. So it's not hitting any highs. Go to Lockheed Martin. Oh my God, they can't make enough ammunition for everybody and fill up the HIMARS system and everything else. The revenue's up 8%. That's solid. Their backlog is huge. They got profitable earnings, good revenues. I mean, everything you'd like to see in a company, except the stock movement's been flat, and that's fine. We got a good dividend on Lockheed, so we'll stay in there. But manufacturing, I think, is going to pick up. And then take a look at our stats of the weeks. Oil's getting up there, getting close to $80 a barrel. You remember it was in the 60s a couple weeks ago? Now it's getting close to 80. Gas, I don't think it'll be above 3, but it's worth watching. Gold just keeps in that 1900 range, and so does silver in the 24. But when you look at the price of crude oil, when we look at the area, I mean, it's been the price movement's been flat. I mean, we've been going up. We got up high in the 80s and stuff. The ETF for oil and oil stocks much higher. Again, we got energy. We're going to be 100% in it. We got Exxon. We got ConocoPhillips. Good dividends. But we don't know. Oil is one of those fickle things. One tanker goes down, and next thing you know, the price goes sky high. So we're in it for the long term. I don't think a lot of problems with either one of those companies. They're profitable. They're making money, and they're going to have a good quarter again. And then our index, well, we got to talk about the Dow. 10 straight days in a row it's up. And when you look at the wedge, it broke it. So that's a bullish sign. It's always hard for people to believe that you buy when the stock breaks out, not when the stock is at the low. If you can predict the low, that's great. We predict lows for several of the techs in November because they were off like 2/3, 75%, and they were still profitable. So we know at some point, we have to buy it. But I mean, otherwise, S&P 18%. It's slowly moving up. The Russell's now above double digits, so that's good. That means the broadening rally is there. But again, Dow's the laggard. 6.3, but 10 straight days. And then Morgan Stanley, one of the big financial stocks too, again broke out of a negative wedge, coming down, and then it broke up high. Again, the 200-day moving average. If you kind of look at it, it's crossed right about here, and you can see it's not quite crossed. Again, it would have been nice to buy the buy up, but had a good earnings, only 2.3% revenue jump. So I don't think it's worth seeing it go up that fast on a company that's financial consulting now, wealth management consulting. Goldman Sachs, I would not own this. This company, it's broke out of a negative wedge also. It's high, revenues are down, and this is a company that makes a lot of mergers and IPOs, and that's slow right now. But they've had some problems internally. They've got they're going to go into the credit card business, and they're going to go into wealth management business, and they're having issues. So I think not a stock, down revenues, chart's been down. I would definitely think of other banks. AT&T, I would never even talk about it, except this has been around forever. I remember the breakup of Ma Bell way back in the 80s. But this stock is the lowest it's been in 30 years. 30 years. Dead money, 30 years. I mean, they spun off Lucent. They spun off, all these other Baby Bells and stuff. Now they got lead pipes wrapped underground. This was originally now Southwest Bell, which changed it back to AT&T. I just think a mess. I mean, I'd buy Verizon, which sold off all their, underground stuff lately. But this is, I mean, you chase a dividend, but look at this. This is a horrible chart. I mean, you don't have a high dividend stock. You don't expect it to drop this much, and they did. And we don't know where it's going to go. I mean, I think you got to overhaul the whole management. Tesla came out with earnings, revenues. It's incredible, 47% increase. Again, we bought it down here at 100, sold it at 200, and it got up to 300, and now it's dropped down again. This thing is going up and down, and it's a tough stock to own. But, if it gets down here, I mean, we're looking at the 200-day moving average crossing right up over here. So, around $200. If it bounces down there, it might be a good time to buy or nibble again, Trend is good. They got all the deals. Toyota just bounced on the deal for the charging stations, too. And 80% delivery. So they're doing well. And then BlackRock is I wouldn't talk about again this one. Again, chart-wise, solid uptrend since the early days. Got a lot of controversy putting the Aramco CEO on the board. Also, they're hit a milestone, $1 trillion under management. That's amazing, $1 trillion. And of course, revenues went up and earnings are up, and not a bad stock. I mean, it makes good dividend. Larry Fink does right on the company. So, if you're going to be in the financial sector, that might be one to take a look at. Again, the moving average coming way down and crossing right over here. So not so bad. Then Taiwan Semiconductors, it dropped. They're having weakness. But look at this. This is all you have to look at, the revenues. It's going down. Some things going around, and I did a lot of digging. The Chinese CPUs, the cheap chips, not a lot of market. China's stalled right now. So guess who's taking the beating? Taiwan Semiconductor. The high-end CPU chips for NVIDIA and everything else, solid. But the other market, is not so good. And then Netflix, again, another entertainment stock. I watch it because it's media, and I have Netflix. I subscribe to it. But a solid uptrend. I mean, really, you could have bought it way back when, and you have to deal with the roller coaster that is Netflix. But revenue's 2.7. That's not really that good. I mean, I think it's for something I think should grow better. It should be like 10%. But they added a lot of net additions, and not so bad. So I mean, I always look at companies. Good stock overall. You could have bought this in the 200s. And then, we haven't changed anything. We've been kind of solid for a while. We're overweight, obviously, tech and communication service. But we have Sirius in our portfolio. And Sirius, look at this, 45% jump in a day. Holy smokes. Put a trading halt, 550 over $7. Barron's said it's a short squeeze. And I could believe it. Look at the volume on this. Everybody was shorted, and because it got up to 5, and they think it's going to go back down. But here's our 200-day moving average. This is the number we're watching. It's going to cross. So they too. Remember, it makes money. Earnings are coming up later, so we're going to see this one. This could be a equivalent of the GameStop, AMC stocks in there. So just be careful with it. I don't know if it's a good time to buy. It'd be nice to get down at $5 or add some more, but. You could have been in the 3s, Let's take a good week. We got another one. We're going to wait for the big hardcore tech ones coming in. That'll be the big week, too. Otherwise, have a good, safe week. Stay cool. And I'll see you next week.